Hello there and welcome to Ringgit Sense, the show where we discuss personal finance issues. I'm Azara Tagaya, your host. Now, over the past few weeks, we've been speaking a lot about tips on property, specifically for those of you looking to own your first home or those who want to look into property investment. Now, one of the biggest hurdles faced by many is securing bank loans. Now, for the first-time home buyers, it's a pretty overwhelming feeling to have a bank tell you that your application for a loan has been denied. So to find out more about how loan applications are processed, we spoke to a local bank to find out how it works. To find out more about the process of applying for a bank loan, we visited Vipin Agrawal, the head of cards, retail assets and deposits at CIMB Bank. We asked him what should consumers first do even before walking into a bank.
Yeah, so I think they can do something even before they go to a bank. Which is to find out whether they can afford to pay the installment for the loan they're going to take. So many bank websites, including CIMB, there's a very simple installment calculator. So if you go to CIMB Bank website, there is a support section and you key in the amount of loan. So let's say you want to take a loan of 300,000 ringgit and let's say a tenor of 30 years. Then you key in the interest rate and it will give you the installment on a monthly basis. So that's the most important thing, whether you can afford to pay the installment or not. Interest rate varies by the bank and by the client. So maybe to be conservative, you can put a 5% interest rate. I think most of consumer will probably get a lower interest rate, but you will get based on the 5% interest rate and the tenor and the loan amount, it'll tell you monthly installment. So that's the first thing. If the installment comes out, let's say 2,000 ringgit, you should be able to pay around 2,000 ringgit a month. Then you go to a bank and bank will typically ask you to fill an application form. And once the application form is submitted, then bank goes through certain criteria to approve or decline.
Once you've done your research, what are the documents you should prepare?
Okay, Vipin, let's say someone walks into the bank counter now and they want to apply a loan. I mean, what are the documentations that you should bring to the counter?
Yeah, so they can come either just walk in or they can fix an appointment. And when they come here, he will advise the client to fill a form, an application form. And the documents are the EPF statement, 3-month salary slip, and IC copy. And then they submit the document. He can also advise the client about roughly how much will be the installment if they take 300,000 loan for how many years. And then he'll accept the form and then get processed. And they get a decision between, let's say, if apply today, by tomorrow, day after, or latest 3 days, they will get the decision. Okay.
But what if you're self-employed? I mean, is the documentation different?
Yes. Obviously, for the self-employed, the documentation is a bit different. You do IC copy, the business registration, 6-month bank statement, and a Form B. So slightly different for, obviously, self-employed.
What if it's a joint application, husband and wife?
Yeah, so husband and wife can apply jointly. Then the joint income will be used for reviewing their debt service ratio and the loan amount they can get.
For those who are self-employed, the process is slightly more complicated as they have to submit their bank statements to prove that they have regular income to pay off the loan.
So bank statement, typically we're looking at the inflow and outflow. It gives us a sense of sometimes the business turnover, the income the self-employed makes. So it's a way to check many things. And 6 months, that's why is not very long, but it is reasonably long.
We also asked Vipin how long can a loan tenure be, or the number of years a loan can stretch out for.
I mean, we see a lot of customers taking for 30, but if you are as young as 25, you could even try 35 years. So obviously, if you take the longer tenure, the installment will be lower, but then it takes longer for you to own the home. So it varies from person to person and their personal objectives. I think banks normally go up to 35 years, but we get customer applying for 15, 20, 25. So it really varies from bank to bank. And also what happens is typically bank has a limit up to which they'll give you a loan. So for example, if you're, let's say 45-year-old, they say, okay, I'll give you a loan only up to your 70. So it might be 25 years. So the number of years for the tenor is a function of how old you are, what your personal needs are, and then the bank's requirement.
One of the major deciding factors a bank takes into consideration when approving a loan are your credit ratings, which is decided by a credit bureau.
So what happens is that I think the consumers may know that there is a platform of CIMB, which is a credit bureau. So credit bureau is maintained by Bank Negara, and every bank every month will submit the data. So let's say, for example, if you have, let's say, 2 credit card and 1 personal loan with 3 different banks, each bank will submit all their customers' outstanding, payment history, key information related to credit to the credit bureau. So when you apply for a loan, let's say to CIMB, when you sign the application form, we also take your approval to go and seek the credit bureau information. So we don't need you to tell us what loan or card you have. We already know from the credit bureau. So we go to credit bureau, get all the information, and then we look at the payment history in the bureau, how well you've been paying. So I really advise all the consumers to keep their payment record clean. If they owe something, whether it's a personal loan or a credit card or auto loan or a mortgage loan, they should pay the installment in time. So we look at that information, and then there is the concept of DSR. I can explain in a bit. These are the factors which goes into deciding whether we can give a loan and how much loan we can give it to a particular customer.
The percentage of loan you can receive for a property is also decided by your credit ratings. Also, if it's a new property or a home that you're buying on the secondary market.
Yeah, so typically, right now we offer 90% for normal residential property, but it can be a bit higher sometime, 95, or it can be lower at 85, 80, or even 70. And that's a function of also it is a first property, or is it a second or third property. There are some Bank Negara guideline on the, if you're a third property, you cannot take more than 70%. So there are some regulatory requirement and some bank requirement to decide how much. But if you're buying the first home, which many of your, the audience would be doing it, then typically 90% would be the loan to value. But again, it can vary depending upon, so sometimes when the bank evaluates your credit history, they might give a different percent than 90.
We asked Vipin what was the most common reasons for a loan to be rejected, and he told us one of the main factors banks look into is whether an applicant can afford to pay the monthly installments. The bank will look at your debt service ratio, or DSR, to see if you have other debts, like credit cards or a higher purchase loan for your car.
So to your question about why the loan will get rejected, typically it will be your payment record in the bureau, credit bureau, or the DSR. These are the two very common reasons why customer get declined. And that's why whenever I talk to consumers, I always say, keep your record clean. Take the loan or spend on a credit card so you can afford to pay every month. Because if you can't pay, then it goes in the credit bureau, and that becomes negative for your record in future credit, including the PT-PTN. Even the student loan are part of the credit bureau now. And so I suggest that people should even be paying their student loan regularly.
After this short break, we continue our interview with Vipin to talk about the different types of loans available. Welcome back to Ringgit Sense. Before the break, we talked about the process of applying for a bank loan with Vipin Agrawal from CIMB Bank. We also asked him what are the different types of home loans available.
So for the mortgage, on the basic level is the term loan. So you apply for certain loan for certain tenor, and you have a fixed installment every month. And within that, you can choose a fixed rate where the interest rate doesn't change, and the variable rate where the interest rate can change with the OPR. The second kind of product, which is quite popular, is the flexi loan. In the flexi loan, you have a flexibility to pay more if you have extra money and withdraw that if you need money. So in the flexi, obviously people have more flexibility, and they can sometimes own the property faster by paying ahead of time. With the flexi loan, there are some fees which customers should be aware, which are in addition to the fee I talked about earlier. So typically there's a setup fee, 200 ringgit or so. There's a maintenance fee, 10 ringgit per month, and there may be some utilization fee. So these are the two products very commonly available, both in conventional and Islamic. What we came out, CIMB came out a few years back, was we call it Flexi Smart. Flexi Smart, you have a flexibility to pay in advance, but you don't have those fees. So we try to make a product which is more, gives you the same flexibility, but where you don't pay those fees, so which has been quite popular. Yeah, so basically term loan, flexi loan, conventional Islamic.
Consumers should also be aware of other charges that you may have to pay when applying for a loan.
On the bank side, typically one is the legal fee, because the loan agreement has to be documented. So legal fee can be up to 1% of the loan amount. And the second could be the documentation fee. Most banks charge 200 ringgit, 250 ringgit for one-time documentation fee. And the third is the valuation fee. Now, valuation fee will only apply if you buy a second-hand property. If you're buying typically under construction from a developer, then the valuation fee doesn't apply. But if you're buying a second-hand property, then that will come in play. And that can be in the range of like 0.1% to 0.25% of the property value. So these are the charges. Now, another one which is not mandatory is there's a concept of MRTA, which is an insurance you want to buy. God forbid you take the loan and something happens to you, then MRTA pays for your loan outstanding. So that way your family is protected. But that is optional, and that is a function of how old you are and how long is your tenure. So that really varies on that, and that can be 3% plus minus depending upon how old you are and how long is the tenure.
One thing that applicants worry about is how long the loan process takes. According to Vipin, it shouldn't take long if all the documents are in order.
So if you give the documents like I talked about, and if you get complete document in CIMB case, we'll approve a loan typically in 2 days or even less at times. So that is the time we take to approve, but it may vary from bank to bank. And as we speak, we're working on a new system where for the new property under construction, you come to a developer roadshow and our people are there. We'll be looking at a process where you can actually get the loan approved instantly. So that is something in pipeline.
Newly married couples should also consider buying a home together. If both couples are working, their joint income will help in the loan repayment. Vipin offers some final advice to improve your chances of getting your loan application approved.
If I have to advise, I would advise people first, they keep their payment history clean. They pay on time, whether a credit card or an auto loan or a mortgage loan. And second is that they take new loans which they can afford to pay. And in case of mortgage, apply jointly, then you have a higher chance of approval because two income come in play.
One of the most important things that a bank will look at when processing your home loan is your credit ratings. In the third part of our interview with property enthusiast Faisal Rizwan, we asked him, how can first-time home buyers improve their credit ratings? Now, he gave us some tips that all first-time home buyers can follow. Faisal Rizwan runs Far Capital Sendirian Berhad, a company that advises customers on which properties to buy to achieve their financial goals. We asked him which one should fresh graduates do first, either save money to get a car or save money to buy a home. He shares his personal journey to owning more than 20 homes.
When I got married, I don't even own a car. You know, my ex-girlfriend, now wife, has one, so she has a car, so I don't have the need. So I took bike to work every day, okay? I still took bike to work today. Because the moment you get a car loan, right, you diminishes your ability to go and get a property. See, I didn't buy any car up until my property in number 13, right? Because my priority was to build a portfolio first. So I mean, of course, you know, people are gonna pressure you and say, hey, come on lah, you know, your salary is not that low, you know, 6,000-7,000, you could buy a decent car, Japanese sedan and whatnot. But to me, I was very clear lah.
His final advice to those who aren't yet earning enough to buy a home is to not worry so much and use the time you have now to build your knowledge and start saving.
My first salary is 600 ringgit. So I'm not going to tell you, at 1,008 you can buy a property because I couldn't buy anything at 600 ringgit. So, so I'm not going to give you that. But typically after 2 or 3 years, as you get more and more experience and you're in the right industry, it's not that difficult to get 3, 4, 5,000. That would be just nice sweet spot. The moment you can start saving roughly about 400 or 500 ringgit per month, that would be the time. So to me, the property market is not going to go for a property bull run in the next 5 years. That's our view. It's going to be a very slow growth, and that's how it should be for a very sustainable market in the long run. So you got time, you should learn, take the advantage of now, learning first. And then second thing is that then build your time, build up your career. Because, let's say, for example, if you earn net 3,500 and below, and you earn net 3,500 and above, from a borrowing point of view, the properties that you can buy are worlds apart. All right? A guy earns 3,400, can only take roughly about 250,000 loan. A guy that earns 3,600, just 200 ringgit more, can actually buy up to 500,000. So those are options.
Thanks for staying with us on Ringgit Sense. You're still with me, Azaria Tagaya. With the Chinese New Year just around the corner, many families are faced with pretty much the same challenge. How do you celebrate a festival without breaking the bank? Now, what happens if you max out your credit card? Should you opt for a salary advance? Well, to find out the answers to these questions and more, we spoke to Lynette Lee, the CEO of the Financial Planning Association of Malaysia.
We met up with Lynette at the Wanutama Shopping Centre in Petaling Jaya to ask her to share some tips on how to set out a budget for festivals.
Okay, so Lynette, is it possible for us to celebrate a festivity without breaking the bank? And how exactly can you set out a budget?
Okay, it's very simple. In fact, it's simpler than what a lot of people think. First and foremost, what they need to do is they got to sit down and plan exactly what they want to, how much they want to spend, what are the things that are expenses that they need to spend on. After that, what they need to do is they spread it over 10 months. And that's the amount that they need to save over the 10 months. So what happens is, why 10 months is because at the end of the 10 month, in case they are short, they got one more month to save. And the 12th month, which is the month of the festival, what they do is they just go out and enjoy retail therapy.
Enjoy the money.
Yes.
Okay.
Don't you think it's fun to save?
It is, and it's going to be fun to celebrate the festivities as well.
Exactly. Without having to worry where your next ringgit is going to come from, where you're going to get the money to spend for the festival.
Okay, so that's your tip, to save at least 10 to 12 months before. So your plan is actually more long-term.
Yes.
Okay, so what about people who are celebrating festivities in the short term? Let's say, okay, maybe it's a bit too late for CNY. So maybe Hari Raya, the next festivity,
Yes.
we only have about 3 months. So
Yes.
how do you save for that?
Well, there are two ways to do it. One would be, because bonus would probably come out by then. So what they need to do is put aside their bonus, don't touch, just spend on their salary. So if they can do that, then they'll find that they will still be able to meet their monthly expenses. So it would mean also, again, coming back to having your budget. And for those of you who think that you don't have enough, what you need to do is you have 3 months to save. So you break what you need to spend during that festival, like Hari Raya, break it into 3 months, and then you start saving each month.
I see. Okay, so there's no set amount on how much you want to save. It depends on how much you want to spend when the festivities come around. Okay.
That's right.
So some companies give out salary advances because they know that their employees often, have to break the bank when the festivities come around. So what do you think about this? Should employees take this advance? Because you have to pay it back.
Exactly. You just said the magic word. Whatever that you borrow, be it credit card or even the company's advance, you need to pay back. And I would like viewers to think that once you take that advance, you are taking your money expenses for the next few months. And if you have to pay back, and you don't have enough to spend for the next few months, will that be a burden to you? If the answer is yes, then it's better to do a bit of a long-term planning. But at the end of the day, if you save it and you put it, let's say, in fixed deposit, you still get a little bit of interest. So why not?
Okay. What about people who take up personal loans at the last minute because they find that they cannot cope with spending during the festivities? What's your advice?
So they probably will need to go back, look at their budget, and ask themselves, if you really, really need to borrow, and I can understand, you need to know how much you really need to spend, minimize your borrowings.
I see.
So that when you pay back, it's not so heavy on the pocket.
Okay. Okay, what about some people who rely heavily on their credit cards and they often max out the credit cards when the festivities come around? So what do you have to say to these people who spend a lot at the last minute?
Credit cards can be very dangerous in a sense that whatever that you need to pay, unless you pay back the following month in full, if you just pay a bit each month, your interest, imagine you pay just the minimum this month, so you roll over what you owe, and there's an interest attached to it, which means that the next month you'll be paying what you owe plus the interest on the interest. So if there's something that you don't want to do, then if you can, try budget and don't use your credit card.
Okay.
If you need to do it this year because you're not ready yet, then borrow minimum, pay back as soon as possible.
Okay, so better to avoid spending what you don't have.
Yes.
Okay, so one more thing, when it comes to festivities, it's not just spending on your clothes and on your house. You also have to spend a certain amount on ang paos.
Yes.
So what would be your tip on the correct etiquette when giving out ang pao, especially for someone who wants to budget their spending?
Yes. What you need to do, then you make out another list. Who are the people you want to give ang pao to? Always preference will be to your immediate family and probably some aged relations. If you don't have enough to go around, these are the first group of people that you want to give to. And give what you can afford. It's more the significance of giving rather than the amount that you give. That's right, no matter what people say.
Okay, so there's no clear-cut rule or rule of thumb when it comes to the amount that you have to give to every person.
No, it's about how much you can afford.
Okay.
Don't let people bully you into saying that you've got to give so much of money.
All right. So your last tip to people who want to save for the festive season, some simple tips that you can give our viewers before we wrap.
Okay, first and foremost, be very disciplined. If you can start now, the earlier the better. And third thing is, you must make sure that your money goes into an account which you cannot touch. No ATM, no internet banking if possible, so that when you need it, only then you go to the bank and take the money out.
So your advice? FD?
Yes, and in the meantime, as you're saving each month, try to put in an FD.
Okay.
So I think it's very simple. The more important thing is, please be willing to do it. And then you enjoy the spending later on.
Yes, there is no better time to start than the present.
You're right.
Speaking of present, have a good Gong Si Fa Chai, and we wish you a happy Chinese New Year. And thank you so much for sharing with us on Ringgit Sense.
Thank you, and this is for you.
Thank you so much. Well, we've come to the end of the show. We hope the tips that we've shared with you today have been useful in helping you plan your personal finances. Now, if you want to see the interviews that were aired today, or if you want to share it with your friends, go to our Facebook page, Ringgit Sense TV3. I'm Masalah, and I'll see you again next week on Ringgit Sense. Thanks for watching.